Welcome to TheStreet.com TV. I'm Farnoosh Torabi. This is Wall Street Confidential, and as always, we've got our great guest, Jim Cramer. Hi, Jim. We want to talk about how commodity prices are affecting soft goods companies. We're hearing it from pretty much everybody. But Coke and Altria, you say, they're kind of, they're not really feeling the pain.
No, Coke said to me last week that the commodity costs have peaked for them. They have a very different cycle. They're not as oriented toward the plastic and toward chemicals as Procter is. Altria has very little exposure to commodities. So what's happening is these are going to get a premium multiple. As interest rates come down, people are going to want to put a higher multiple in these, what I call the indestructible companies. It looks like Coke is indestructible. Look at Altria is. I just don't see the cost. Procter was a bad call. Everyone should just go read the conference call because it's like they kind of got caught more than I'm used to thinking. Now, the stock's not going to go down a lot. They're buying back a lot of stock. They're going to do a lot of things that are right. It's just that I'm used to Procter really moving up after a quarter, and there's now been a couple quarters where they didn't. They bought a lot of stock at the 65 level. I would think at 67, 69 will be the floor for it. Colgate getting more luster because of its end markets, Latin America doing very, very well. Ultimately, I think that the way to be able to play this is these are stocks for if you think the Fed's going to do the wrong thing. Not just today, but forever. I mean, anytime you think that the Fed is off course, these are going to be the two until we get commodity prices down. And most of the commodity prices we're talking about are oil-based, so they're not going to go down. They're either oil-based, like in Kellogg's case, it's derivative oil-based because the grain prices have gone up a lot because we're trying to have this meager effort to do ethanol from grain. So those two become less interesting to me.
And wheat is going up.
Right.
Crazy.
Kellogg is just less interesting to me, and Procter's less interesting to me. They're not going to go down a lot. They're not sales. If you own them, they'll do okay. They will not outperform Coke and Altria, in my view.
So you say Coke. What about Pepsi?
Pepsi's harder because the Pepsi side of it is clearly in the same good business as Coke, although much more domestic. The Frito-Lay side is a little more problematic because they've got a Kellogg problem. The company did not have a good quarter versus expectations, but is doing well and has got a big buyback. I would put Pepsi in the camp of a little bit better than Procter, not as good as Coke.
All right, thanks a lot, Jim Cramer, on Coke and Altria, two stocks head of the class, as he says it. Thanks so much. This is Wall Street Confidential on TheStreet.com TV. Stay tuned.